Hi, and welcome to this week's look at the major news stories that have affected the market so far and probably will continue to do so. Can't really get away from it this week. We've had some inflation figures out, so we're going to take a look at the FTSE 100, to see how that's been getting on post those figures. Obviously, we also had data out from the States. So secondly, we take a look at what's been happening with the US dollar in the last few days. Then we're going to flip and have a look at some commodity markets, and we're going to take a look at gold. That's obviously been flying high recently, but has it reached an important resistance zone? And finally, we're going to take a look at what's been happening with Brent crude oil this week, and despite some concerns in terms of Iran and Israel, that's actually fallen. So we start off, we're taking a look at the FTSE 100, and that's risen slightly after inflation has slowed further in the UK. So on Wednesday, the Office of National Statistics reported that the CPI level was at 3.2% last month. Now, the expectation was 3.1%, so slightly above expectations, but lower than the previous figure of 3.4%. So the trajectory is still in the correct direction. In fact, inflation's at its lowest level for 2.5 years. Will that influence the Bank of England to lower the interest rates? And in fact, would it influence them to do it as soon and as early as June? So in anticipation of an easing, perhaps, of monetary policy, the FTSE's up slightly. We did see the magic 8,000 mark towards the end of last week, and then it eased off to around the circa 7,800 level on Tuesday. As of time of recording, we're sort of toying again, pushing back up to the 7,900 mark. We take a look at the chart, see what that shows us. Well, we can see that it's formed an ascending channel. We're showing that in blue on the chart. And we can also see that there was a clear rebound from the support block and an area which was previous resistance, circa 7,800. Worth noting, though, that bearish arguments remain strong. Take a look, there's a sharp rate of decline from A down to B. It's a very sharp move, so has some form of power behind it. Also, the price has broken down the intermediate trend line, which we're showing in black on the chart. So will the market be able to resume its rally that's indicated by the blue channel? Well, the seriousness of the bullish sentiment in the UK stock market could well be indicated by the price's ability to rise above that median line of the channel and above the level of 50% of the decline A to B. So we're looking for a bit of clarity. We're looking for the market to make a move, make a statement one way or the other, really. As ever, you know, you've got to keep your ears and your eyes open. We are being driven by some quite fundamental analysis at the moment, as well as technical analysis. So keep your ears to the market. Okay, time now to turn our attentions towards the US dollar, and a slight correction after the head of the Federal Reserve spoke earlier this week. We saw some good data on the US labour market and further rises in inflation. It's sort of a theme for the last few months now in the US. These have reduced expectations of a change in monetary policy. I think it's fairly clear to say. In fact, in a speech on Tuesday, Jerome Powell said more confidence will be needed that inflation is moving sustainably towards the 2% level before it's appropriate to ease policy. So clearly expectations of a short-term decrease in interest rates fading in the US. But the dollar didn't really strengthen as much as you might expect off the back of that sort of rhetoric. Perhaps buyers need a little respite for the moment. Let's have a look at a couple of pairs. We'll take a look at sterling against the US dollar, a cable. At the beginning of the current 5-day trading period, diverse data from the UK. Feb unemployment rate was actually up to 4.2% against an expectation of 4%. Average wages also increased to 5.6%, again expectation of 5.5%. And CPI was higher than forecast, 3.2% versus 3.1%, although we do know that is lower than the previous month. So pound buyers found and tested some support at around the 1.2400 level. Now, technical analysis showing up on the chart there. We can see, if we're looking at Japanese candlesticks on a daily time frame, there is a bullish engulfing combination being formed. And if the price fixes above 1.2480, we may see that correction may well extend to 1.2520 to 1.2540. On the flip side of that, a refresh of the recent low could lead to a start of a new downward impulse in the direction of about 1.2280 to 1.2330. So again, a little bit up in the air. Factors abound, different data coming out, worth keeping your eyes and ears open. And cable's an interesting one. Obviously, inflation moving in the right direction in the UK, but not in the US. Yeah, pound slightly stronger. Be interesting to see what happens in the next few days. And let's now just take a quick peek at the dollar against the Japanese yen. Well, judging by the sharp strengthening of the pair that we can see on the chart, the Japanese regulators are in no hurry to intervene. We've discussed this previously, but obviously that does remain a potential factor. We saw a slowing uptrend just before the 155, the level mark. Technical analysis shows it's a bullish harami combination being formed on the daily time frame, again using Japanese candlesticks. If that's confirmed, the pair may correct to 152.6 to 153.2 sort of levels. On the other hand, a break of 154.7 and the pair may well strengthen to the nearest round marks at 156 the mark to 157 the mark. So a little bit of volatility creeping into these FX markets yet again. Don't forget your risk management techniques. Okay, third up, and something we've again spoken about recently, and that's gold. And the gold price has reached an important resistance zone. Tuesday saw the price approach the $2,400 per troy ounce mark, mainly driven by fears of a new round of inflation due to commodity prices increasing. Obviously, geopolitical tensions probably the most important factor at the moment. An awful lot going on around the globe. On top of that, we've also got US national debt and the upcoming elections in the US. Now, all of these can be considered destabilising factors. Of course, we know traditionally gold is seen as a safe haven, so not a massive surprise seeing it doing well based on what's happening globally at the moment. And in fact, according to Goldman Sachs analysts, gold is in an unshakable bull market, and they've raised their price forecast from $2,300 an ounce to $2,700. That's a considerable increase and shows the impact that geopolitical concerns can have. In fact, gold's up 15% this year. I mean, can it continue? The fundamentals backdrop remains the same. And with something like gold, you can't escape those fundamentals. But technical analysis and look at the charts does show some potential headwinds to consider. We've got the ascending channel in blue, and that's near the upper line. And as those arrows shows, that's previously acted as resistance. We've also got the psychological level of $2,400 per ounce. And the price, in fact, returned quickly below that mark when it went past it recently. You can see it was quite a significant sharp drop back. The RSI suggests that the market is overbought. And if we take a look at the Fibonacci proportions, if we take A to B, that move there as 100%, then the growth from point C has already exceeded the 1.618 level. That's circa the $2,335 an ounce level, which could well become a target on the downside. You've also got to consider possible profit taking after a period or a longer period of rising prices. Now that could contribute to a formation of a correction, e.g. back to that lower intermediate channel, the lines that we're showing in black. But it's fair to say with everything going on in the world, it's going to be a tough market at the moment. That fundamental analysis is remaining very, very pertinent, potentially at the moment more so than technical analysis. So, anything that happens globally is going to definitely have an effect on the price of gold as it stands. Okay, finally, we're going to stick with commodities and we're going to take a look at oil and Brent crude in particular. And Brent crude has fallen by more than 4% since the start of this week. That's despite what we saw happening with Iran and Israel at the end of last week and over the weekend, which you would have thought perhaps would have given a bit of a fill-up to crude oil markets, but crude was actually down. In fact, a number of factors did contribute to the fall of greater than 4% this week so far. We've seen in the following days perhaps an easing of concerns about an escalation between Iran and Israel, whilst obviously it's still ongoing and it's still vitally important. You factor that in, it does seem to ease slightly, and that's important, of course, because Iran is the third largest producer in the world. So any supply chain issues could have some serious impact on the market. There's also been a reduction in consumption. In fact, JP Morgan noted this week that global oil consumption in April stood at 101 million barrels per day. But that's in fact 200,000 barrels a day lower than was forecast. We've also seen a growth in oil reserves in the US. Crude inventories rose 2.7 million barrels last week. So we're sort of seeing, demand easing slightly from expected levels, inventories going back up. makes sense they're contributing to a slightly lower price. Take a look a bit at TA and we'll have a look at the chart. The price has declined to the lower boundary of the intermediate ascending channel we're showing with black lines. We may experience a rebound from $86 where the support is located, and that support is formed by the median line of the long-term blue channel and that lower border of the intermediate black channel. It's a little bit of bearish sentiment there, but no, that bearish sentiment may well be hampered by the so-called risk premium associated with geopolitical factors at the moment. We know how important the Middle East area, Russia, Ukraine are to oil production. So any changes, any escalations, any new conflicts arising will almost certainly have an impact on the oil price. So again, look out for volatility, keep your eyes and ears open, use your risk management techniques, and we'll wish you luck with your trading in the week ahead. Bye for now.